Hey everyone, in this video I'm going to highlight at least one thing that smart investors know about Canoo stock. So let's get right into it. That thing that I'm discussing right now is production. So Canoo is targeting an end of 2023 production run rate of 20,000 vehicles. That's going to be a significant ramp up from its recently update, right? The most recent update it gave is when it delivered 3 vehicles for NASA. So it's growing, it's jumping from a starting point of standing still to going to 20,000. But if it does meet that target, then the next goal is to hit 40,000 run rate by the end of 2024. Now, run rate can be inferred a few different ways. Number one is on a monthly run rate, right? So if the company reaches, let's say, something like 2,000 vehicles produced in December, that can be thought of as a 20,000 vehicle run rate for 2023, right? So it doesn't mean it has to produce 20,000. It just means that if it produces 2,000 and you annualize that monthly figure, it will be a 20,000 run rate. Okay, another way to look at it would be quarterly. So if it, let's say, reached 4,000 vehicles for the quarter, right? Or I'm sorry, 5,000 vehicles for the quarter. Annualized, that would be 20,000. So a few different ways you can look at that production run rate and a few different ways Canoo can hit that target. So after it, if it does hit that 40,000 run rate by the end of 2024, the next target is positive gross profit margin in 2025. So ambitious goals to be sure here, because the company is still ramping up production. They're installing equipment. They just secured the long-term lease at the manufacturing facility, so it still needs to produce and really get to this level. Remember, they only produced 3 vehicles to NASA in July, so they're just getting started. The good news is that they've got a $2.8 billion order book. Customers are lining up to buy their electric delivery vans. Customers can get a $7,500 tax credit for buying that, and switching to electric could save commercial businesses money on delivery, transportation, and so on. So the company had an effective cash balance of $69.7 million as of March 31st. The cash balance is key because this is the money, hopefully, that they will use to ramp up production and make sales, and then use the money from sales to ramp up production. Hopefully, they will not need to go back to investors and raise more capital. They may or may not have to. So here's their update here, saying like on April 25th, they would have a balance of 69.7 million, and then here is the $2.8 billion order book. These are pending sales agreements with Fortune 100 and Fortune 500 customers. So the company's proven that it has something that customers want. It now needs to prove that it can produce those vehicles effectively, efficiently, and ramp up production and hit those milestones. So that's the key factor that Canoo stock investors are now paying attention to. Can they hit these milestones that they've set out for themselves? And each time they get closer to hitting that milestone, you can observe the stock price will or should react positively, because they're setting a target, they're hitting it, setting a higher target and hitting it, and that builds trust and it builds confidence with investors. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.